What is going on, investors? I got a great video for you today. SoFi's trading about $7. We're just a scotch under $7. We got down to, I think, the 660 range, and we've kind of been treading upwards a little bit for the rest of the week after that sell-off after earnings. The sell-off always comes after earnings. This time we just didn't get a big pop. We just sold off considerably. Okay, I have a bull article and a bear article today. I want to go through these articles, see what these guys are saying, and see who is actually telling the truth and who is just making stuff up to fit their narrative. Let's get into it. Stay away, says Wedbush about SoFi stock. All right, Marty Struble, let's hear what you have to say. This is a bear article about SoFi. Let's see what he has to say. It says shares followed a similar path once the neobank dialed in its latest quarterly readout. The company beat expectations on the bottom and the top line, but hardly seemed to matter to investors who sent the shares plummeting as the company's guidance failed to meet expectations. Nothing he said there is not true, right? So let's just figure out a little bit of this context, right? In Q1, SoFi generated adjusted revenue of $580.65 million, amounting to 26.2% year-over-year increase, while beating the street's forecast by $21.12 million. That sounds pretty good to me. EPS of 2 cents also fared better than analyst expectations of 1 cent. So we doubled what analysts thought for EPS to get to 2 cents. So if we do 2 cents every single quarter for the rest of the year, we will come in at what we were guiding for when they let out annual guidance last quarter. They predicted 8 cents of EPS for the 2024 year. So as long as we come in with that, we'll be right where we need to be at the end of the year. However, for Q2, the company expects adjusted net revenue in the range of $555 mil to $465 mil, below the consensus estimate of $590 million. Where are they getting these numbers from? Tell me where you are expecting SoFi to make $590 million in Q2. Just a little context. They just come out with these numbers, but they don't tell you where they get them from. They're like 580, 585, 590. We don't know where it comes. We're just going to say it. It's absolutely ridiculous. SoFi also anticipates adjusted EBITDA of 115 to 125 million, falling short of Wall Street's forecast of 135 million. Once again, they're just coming up with these numbers. They're kind of pulling them out of their ass. However, at the same time, the company raised its full year forecast. So we're raising guidance. We're beating on the top line and the bottom line. How many companies, especially banks, are beating guidance consistently every single quarter with triple beats, raising guidance with this kind of year-over-year growth? I don't see too many of them. Let me know if you got some down in the comments below. SoFi is now expecting adjusted EBITDA to come in between $590 and $600 million, up from previously stated $580 to $500 million range, and above the street's call of $585.7 million. Additionally, revenue for the year is now expected to come in between $2.39 billion and $2.43 billion. That is not only an increase on the prior guide of $2.365 billion to $2.405 billion, but also above the consensus estimate of $2.38 billion. You're saying a lot of positive stuff to not buy the stock, Marty. What's going on, Marty? You're saying all this good stuff, but then you're like, don't buy the stock. I don't like good things. I only like bad things. All right. So it's clear investors were more concerned with the near-term outlook here. They might also have been wondering, like Wedbush analyst David Chiaverini. Okay, just for a little bit of context, David Chiaverini is legitimately one of the worst analysts that TipRanks has in its database. This guy works at Wedbush. I don't know how Wedbush is still hiring you. He's got a 44% success rate. He's ranked 8,025 out of 8,800 Wall Street analysts with an average return of negative 3.8%. David, you're terrible at your job, bro. You need to find a new hobby. Good Lord. Wedbush analyst David Chiaverini is wondering if the 2024 guide is a realistic one. Considering Chiaverini believes the tech platform's anticipated revenue growth is a major component of the company's current 2024 guide, and the tech platform revenue is expected to be seasonally weaker in Q2. given the steep implied ramp up in the second half of the year. Chiaverini thinks it might be difficult for SoFi to meet its target of 20% tech revenue growth this year. Last time I checked, SoFi has 3 segments that are profitable right now. There's the tech platform, there's the financial services platform, and lending, right? They're only guiding lending lower because of the current environment that we're in. We listened to Jerome Powell talk yesterday. He's saying that they're probably not going to cut rates this year. Maybe 1, maybe 2 at the end of the year. So these rates are going to stay high. So in this type of environment, it could be harder for people who get loans to pay them back. So that's why Anthony Noto and his team are kind of being cautious with who they give loans to and with the amounts, right? So I'd rather them be more cautious than to just give out loans willy-nilly and have it backfire in the long term. Continuing with the article, that is just one of several other negatives, which include loan origination and sales revenue being the lowest reported on a quarterly basis going back several years. What? SoFi plans to be conservative with lending segment growth despite its recent $600 million debt to equity conversion. And then 3, the departure of multiple senior level employees. Chief Risk Officer took a position at PayPal and the president of SoFi Bank, new position not disclosed. Okay, I did a video on this already. The 2 people that he's talking about, the one guy came out of retirement to work for SoFi for a couple of years. He has not taken a new job, so it looks like he's going back to retirement. And PayPal has a lot of free cash flow at this point in their company's trajectory, right? So they waved some cash in front of one of these senior executives who I think they poached him a little bit to kind of piggyback on what SoFi's doing. Oh, SoFi's doing all this great stuff, so let's pay this guy a lot of money so he can come do that stuff with PayPal. If anything, I'm like, okay, SoFi's doing such great stuff. Companies like PayPal are going after our executives now. That's a positive, man, in my opinion. So I'm taking that negative and I'm just giving you some context of it. So they say all these big, bold statements without any context. You could say all you want, but without any context, it's meaningless. It says, all in all, David Chiaverini rates SoFi shares as underperform, a sell, along with a street low price target of $4. Investors stand to lose 42% should Chiaverini's bearish thesis go according to plan in the year ahead. Well, considering this guy, David Chiaverini, has a 44% success rate and does this for a living, I'm not taking anything he says to heart, man. His average return is a negative 3.8%. He could literally invest all of his money into an index fund and quadruple the returns that he's getting right now. If you're negative 0.38% over the last couple years, if you're not making money the last 2 years after the market correction happened, I don't know what the hell you're doing. So David Chiaverini, this guy's a super bear. So all of this guy who wrote this article was saying the opinions of another bearish guy. So Marty, where's your opinion at, bro? I don't care what David Chiaverini says. What do you have to say? He's just talking about David Chiaverini. This guy is literally just copying and pasting what David Chiaverini has said about the stock. Marty, come on, dude. Don't you have your own thoughts and your own opinions on SoFi stock? This is a terrible article. Tip ranks. Marty, do better. Be better. Bring a little bit more to the table. Give us some context. Don't just regurgitate what somebody else said. Marty, what is your opinion? You're writing an article about another man's opinion? You should be embarrassed for yourself, man. You really should. All right, now let's go to the Bull article and see what that article says about SoFi moving forward. All right, SoFi fam, this article comes from Rayado Sofian. He's a writer for Seeking Alpha. SoFi, the sell-off doesn't bother me one bit. SoFi just reported a solid Q1 with a triple beat on analyst estimates. The average SoFi member uses less than 2 products, presenting cross-sell opportunities. SoFi added 622,000 new members in Q1 with marketing efficiencies up 50% year over year. That's an amazing number right there. SoFi also turned net cash positive in Q1. Double thumbs up. Despite all this, SoFi is trading at its lowest valuation multiple ever. That's definitely concerning, right? There is some sort of negativity with institutional investors, right? Right now, we're about 40% institutional investors compared to, 55% plus of retail investors, right? So we need that to flip. It was 36% last quarter. We're up to almost 40%. So that's really, really good. And we're moving in the right direction, but it's still going to take a little bit of time. There's a lot of people trading this stock, especially around earnings. So let's see what this guy has to say. SoFi is the fastest growing fintech company that offers consumers a one-stop shop for all things finance, including digital banking, loans, stock investing, and more. The company also operates a separate financial tech platform called Galileo, which offers enterprise financial services such as card issuing, payment processing, and digital banking capabilities. The company recently reported Q1 earnings that beat estimates on top, bottom line, and full year guidance. It was yet another solid quarter for SoFi. You would at least expect some positive market reaction. It did rally up during pre-market hours, but then things turned quickly for the worst, sending shares down 10% by the end of the day. Despite a triple beat on estimates, the stock was criminally mistreated. There's no way around it. Year to date, SoFi is down more than 30%. Yikes, man. If you're a SoFi investor and you've been holding for these years, I can understand why you might want to move your money elsewhere, right? I'm going to be real with you guys. I'm always going to tell you the truth. There's been a lot better opportunities in the market over the last 2 years where you could have made a lot of money. SoFi has been dead money. Unless you're selling covered calls, that's the only way you can generate some revenue from your investments, right? And to do that, you need over 100 shares. I'm holding around 4,000 shares right now, so I've been selling a crap load of covered calls. So I've been making a lot of money doing that, which is great. But I agree with him. This short-term price volatility doesn't bother me at all whatsoever. Warren Buffett always says that the stock market is a weighing machine, giving profits to the patient and taking them away from the impatient. And I agree with that wholeheartedly. I think SoFi will have its day. It's only a matter of time. Next, he talks a little bit about revenue. Was $645 million, growing 37% year over year. This included a one-time benefit of $59 million from the recent exchange of its 2026 convertible notes. That's one thing we all have to take into consideration as we have our expectations for Q2, right? Excluding this benefit, adjusted revenue was about $581 million, up 26% year over year, which beat analyst estimates of $560 million and management's guide of $555 million. So the revenue looks pretty solid for SoFi going forward. He then goes to break down the lending revenue, the tech revenue, and the financial services revenue. Right now, lending is decreasing a little bit because of the cautiousness that Noto and the management team are using. And the tech platform and financial services make up about 50% of the revenue and the other 50% coming from lending. Members are up 44%. He talks about total products grew 38% year over year to 11.8 million. We're just going through these segments and it's very, very, very good for SoFi investors moving forward. Profitability, looking at profitability, Q1 contribution profit was $276 million, representing a contribution margin of 47%, which expanded 300 BPS year over year. If you take a look at this chart, the contribution profit is in dark blue and the contribution margin is the line in light blue. And then we're going up in both segments. Contribution profit is rising up as well as the contribution margin. And that's a great thing moving forward. Next, he talked about net income. In dark blue is the net income. The line in light blue is the net margins. And as you see, over time, we've become more and more profitable. And in the last 2 quarters, we actually have positive net income, which is huge. And look for that to continue to increase in Q2 and Q3 and in Q4 for the rest of 2024. This is one thing that I think is really, really important, right? Because SoFi has been spending a ton of money on marketing, guys. A concerning amount of marketing. Between the NBA deal, between the SoFi Stadium naming rights, all the commercials, dude, paying all these stars like Justin Herbert from the Chargers and now Jason Tatum from the Celtics. All those things cost money, man, but the efficiency is continuing to improve. And he lays out that the marketing efficiency is getting better over time as well. And this is huge, right? I've calculated new members and products divided by sales and marketing expenses as of Q1. New members acquired per 1 million in S&M expenses was 3,704, up from 2,473 last year. In other words, new member acquisitions was 50% more efficient than a year ago. That is huge, man. We're becoming more efficient. Our name's still getting out there. Why being more efficient? I love this kind of research, right? Because it really gets to show you just how SoFi is working on a fundamental level, everyone. I love this. This is one of the most important things. So what do we get away from these two articles, right? The bear article that we read was a horrible article with no context at all whatsoever. If they laid out their claims with actual numbers and facts to back it up, I could take it seriously and actually consider it when I'm making my investments. But when you don't, you just make blanket statements and there's actually no real research behind it. I can't get behind what you're saying. But this guy did an amazing job on this bull article, really breaking down why he has a bull thesis with specific numbers, cross analysis. He did an excellent job. So when you're doing your research on any investments, whether it's SoFi or whatever, you got to look at the bear stuff and the bull stuff and check out the context between both of them and see which one you tend to agree with based on the arguments that they're presenting to you, right? But if the bear arguments aren't presenting any actual numerical data, it's hard to justify what they're saying, right? So that's why I think this bull article knocked the bear one out of the park. Let me know in the comments below, which one did you like better? If you want to check out this article, go over to Seeking Alpha. This guy did an amazing job. I want to give him a shout out, Rayado, Sofi, and read the whole article. There's more details in there that I didn't get to because I'm running out of time. I don't want to keep you guys here all day. But the dude did a killer job. I'm loving what he's doing. I can't wait to see his next article on SoFi. Thanks so much for tuning in, guys. Don't forget to hit that like button and subscribe to the channel. We're getting closer and closer to 1,000, but we need your help. Subscribe to the channel. We'll catch you on the next video. Peace.